What's up, guys? Today we are going to be talking about how to identify dog shit PA, or in other words, this entire month. Because I know for a lot of you guys, you have taken a lot of L's throughout this month because you have taken trades in unprofitable trading conditions. And here in this video, I'm going to give you the 3 things that can help you identify when PA is just not worth taking a trade in. So if you are a person who has taken multiple L's, even losing a funded account or blowing multiple evals throughout the month of October, this video is precisely for you because I have taken 4 trades, 1 loss, 3 L's, 75% win rate, and I am up on my funded. If you want the screenshot, it's going to be right here. It's only going to show one of them and it's my loss, and I need to find the other screenshot. But if I can't find the screenshot, then just take this as my 1 L and the other 3 W's as that. Anyways, if you think that 4 trades throughout this entire month is bad for good, solid trades, there might be something wrong with you. Because throughout this entire month, I have seen so many people blow fundeds, blow evals because they can just not understand when PA is bad and they just cannot get off the charts and they take bad trades in unprofitable conditions and lose those accounts and have to restart from zero. And it's as simple as 3 things. Now, these 3 things are going to be easily identifiable through the charts, but I'm going to try to explain them in words. But yeah, let's get into the first one. So the first one is going to be when price is just chopping towards a draw. This means 2 things. First of all, market doesn't know where it wants to go, which means it's unpredictable, unprofitable. Unprofitable times means you shouldn't take a trade. Second thing is, if price is chopping towards draws, the volatility is also not there, which means less volatility, less reasonings to take a trade. It's the same thing like taking a trade in Asia session when there's no draw. It's like the volatility is obviously not going to be there. There's no clean draw. And if you take a trade during that period of time, you're guaranteeing yourself a loss, or you're going to be stuck in a trade for a really long time, and break even is going to happen. So I'm going to bring up a screenshot of what today looked like in market open. And as you can see, we are just chopping and chopping and chopping. Now, the draw for today was London lows. I wanted London lows to get taken and then for us to continue higher. After about an hour of me being on the charts and realizing that we're not taking out that draw and volatility and market conditions were just not there, I knew that today was going to be an unprofitable day, and I just got off after an hour of looking on the charts. I know people in my Discord that were staying on the charts till like 1 p.m. My brother in Christ, we need to get off the charts after like an hour, 90 minutes max of looking at the choppiness. Besides that, the second thing that I need you to focus on is if market immediately takes out the draw, let's say last Friday, here's another screenshot where we had data highs and data lows, and immediately after market open, we take out the data highs, and that's the draw. You might as well just get off for the day because your draw for the day has already gotten taken. And if you are thinking and knowing where price wants to move, such as last Friday, we're super bullish, we want to go higher, and we took out the data high draw, what is the reasoning for you staying on after we take out that draw? There's nothing. We're at all-time highs. You're targeting thin air after that. And I'll take another screenshot of exactly what happened. We just chopped. We continued to chop for hours after that. So if you were just staying on the charts trying to catch a trade after we took out data highs, you would have either lost a trade because we were chopping, or you would have been on the charts for more time than you needed to be. It is as simple as you get on the charts, you see your draw, and if you need help with daily bias, I also have another video on that. It's not that difficult. But after your draw gets taken for the day, you might as well just get off. Cut your temptation to take another trade, and also just for your psychology, just to get off the charts and be like, you know what, I need to hit the gym, I need to study a little bit, I need to do something else, so that you can just get your mind off of, oh, I should have taken the trade to that draw, but I didn't, and now I missed that opportunity to make money. So simple as that. On to the third thing. This last one will make you feel extremely silly, and it is just about high time frame market structure. If you are looking at the high time frame market structure and you see the 4-hour or 1-hour gaps, fair value gaps, order blocks, and you just see them getting tapped repeatedly, or it takes a long time for them to get tapped into, such as we're chopping down to one, or we're tapping into the same one multiple times over and we're just ranging, and you go down to the 15-minute, the 5-minute, and it's doing the same thing, and then market opens and we're still in that range, it is the easiest no trade day of all time. Think back to number one, no volatility, taking out draws super slowly, market doesn't understand or know where it wants to go, creating unprofitable conditions, which will make you more likely to take a loss because, again, unprofitable conditions, terrible trading conditions, you take a trade in those two, you're bound to take a loss. The markets themselves are already unprofitable. You have to be smart when taking these trades. So again, to rethink, the high time frame market structure, the 4-hour, the 1-hour, is either super choppy, in a range, SMTs at highs or lows, we're repeatedly tapping into fair value gaps, order blocks, or we're chopping toward them and not taking them out cleanly and effectively. On the higher time frame, expect the lower time frame to do the same. And if market opens and it does the same thing, we chop, we don't take out draws cleanly, we don't take out draws cleanly, we don't take out, fair value gaps, tap them and immediately reject out of them. Again, we're in the range in a lower time frame, 5-minute structure, we're still just in a range. If market opens and it doesn't break out of that range one way or another, we're probably just gonna chop slowly either out of that range or we're just gonna be stuck in that range for the rest of market open. So to break this down again into the simplest form, it is basically if we take out all of your draws at market open, you're hopping off. If market structure on the high time frame is choppy, we're not taking out the draws properly, we are tapping repeatedly into fair value gaps, new week opening gaps, order blocks, all that fancy stuff. We have SMTs at the highs and lows. You're probably gonna wonder at market open if we do the same, and if it does the same, you're hopping off. And this is basically tied into with the third thing that, again, if we are chopping and we are not taking out draws cleanly and rejecting out of them at market open, or we are in a range, you are just hopping off, saving yourself time, saving yourself mental space because you're not going to be on the charts for longer. You're not going to be taking dumb trades because you stayed on the charts for longer, and you're going to be up because you didn't take a loss like other people would have if they stayed on the charts. So there's my breakdown on how to understand bad PA and how to save yourself from taking unnecessary losses and helping your psychology as well. I hope this video helped. I love and appreciate you guys, and I will see y'all in the next one. Peace out.